Yo, I've been gone, guys, for months, and I'm sorry, but I had to focus on me. I had to figure out a couple of things so I could come back even stronger than before. But you guys probably saw the title of this video and you're probably stoked. I'm gonna show you guys my US30 strategy. This is something that I've developed over the past couple of months. That's why I've been MIA, because I have been working on this strategy and perfecting it to a T. And I'm gonna show you guys exactly how I'm making and catching a couple hundred pips every single morning trading, even up to a couple thousand pips trading US30. So if you guys do need a broker to trade US30 on, you can check the link in my description, and there is one that I recommend you guys. As well with that, if you guys want to learn how to trade, check out the website. It should be right here, RORFX.com, where you guys can check it out. But without further ado, let's go into the video. I want to show you guys exactly how I trade US30. See you guys right now. Alright guys, so I'm going to show you exactly how I trade US30, what I'm looking for, all that good stuff. Right off the bat, when I'm trading US30, I'm literally just looking at the minute 5 and the minute 15, and I use them in Confluence. So if you want to know how to pull up two charts at the same time on TradingView, you're going to go right here. Usually it will be like this on the default setting. You're going to go right here and click 2, and boom, there you have it. So another thing that I have is my session breaker. If you guys go right here, you can type in session. So you're gonna go actually right here to the indicators, and you just type in session, and it's this one right here. You click that, and then you can go to the settings. You can choose the color that you guys want for it. Super simple. So with me, I'm in California, so the times that I prefer to trade are the New York time, the New York session. So really the open of the market, as you guys can see, is 6:30 a.m. So right here's when the market opened up, right on this 5-minute candle, and this is it right here on the minute 15. Now I gotta let you guys know, when you're trading equities, forex pairs, indices, whatever it may be, you guys want to trade on the open of the market. And the reason as to why I say that is because that's when the most volatility is in the market. That's when you're going to see the biggest moves happen. But you guys have to be careful. Make sure you're using a stop loss, of course. And as well with that, a lot of the time when the market opens, there's a false breakout. So you guys can see the overall move, it was going up right here, but this is the market open, these two 5-minute candles. And it really just told people like, look, we're going up, we're pushing up, there's a lot of volume going up. And then as soon as it did that, it trapped all the buyers, because a lot of people, when they see momentum, the market pushing up super quick like that, they're like, oh my God, everyone's going long. We need to be a part of this action. Let's buy. That's what a lot of retail traders are doing. So one thing with me, I'm very patient. I don't just force a trade. I don't go with the first setup that I see. I don't get my emotions involved in the market. As you guys can see, it went up. There's a false breakout, trapped all the buyers, and immediately pushed down. Once I saw that, I knew that this was the HOD, the high of the day, or the HOS, the high of the session right here. And as soon as that happened, it hit that zone and then moved away very quickly. We do have right here where it started to go up, pushed up, we saw a reversal candle right here, doji, then it dropped, then one more time. As you guys can see, if I zoom into here, what it really did right here is, this is where the market makers and the big banks and institutions came in, is they told everyone, look, we're gonna go short now. And they came down, then this candle, this bullish candle, came out of nowhere, and notice how the wick went a little bit higher than the wicks over here. That's because a lot of people, when they saw the market dropping, they trailed their stop probably to entry if they entered right here, or they had their stops right above these wicks right here. And then what did it do? It came and stopped them all out, and then went in the initial way that it wanted to go. And this was during the New York session when the market was opening. You guys can see from that drop right there, I would have definitely waited for that candle to close. If I was to enter, I would have entered right there, had my stops right above the HOS, the high of the session. And if you would have entered right there, your stops would have been about 644 pips. Obviously you have to kind of manage and decide, okay, if I'm risking 644 pips, what is my stop loss going to be, or what loss size am I going to be using, excuse me. And you guys can see that it did drop down 2,200 pips. So it would be pretty cool if you were to catch that whole move, and be like, all right, this is when it's gonna reverse. You could have seen that reversal candle right there, got out, but honestly, you probably could have got 500 to 1,000 plus pips on that trade right there. Super, super good trade that happened, and that's all during the New York session. As you guys can see, once the session ended, all it did was consolidate it. It was just building up and accumulating orders right here. Nothing really was going down. Overall, nothing was really happening in the market. These are the moves that we want to be catching right here. So these are the times you need to be trading. If you guys want to write these down, 6:30 a.m. to 8:30 a.m. PST are the times that I'm looking to go into the markets to find a trade. So right here, this was 6:50, 6:55, 7. So right at like 7 a.m. is when there was a pretty clean reversal and the overall real move happened, because if you were to start trading at 6:30, you would have only caught these 2 5-minute candles. It's not like we're gonna start trading at 5:30 a.m. Like, you guys wanna trade at the open of the session at 6:30 a.m. PST. That's the time in California. So you need to kind of like correlate, okay, what time is that for me? And then you guys can see, boom, we had that push up, false breakout, trap sellers, and then went down, or trap buyers, and then totally went down. So that was the overall move right there that you guys could have caught. The thing that I'm telling you guys, or the thing that I told you earlier, is I'm using the minute 5 and the minute 15 in confluence because they work so well together. You guys could have seen that we had this long wick right here on the minute 15. Whenever we see these long wicks, like, that's a good telling sign that, okay, the market's most likely gonna go the other way. We have a long wick right here to the bottom. What happened? The market shot out. Long wick to the bottom right here, the market went up. So the same thing applies here. When we have wicks to the top, it's going to drop. When we have wicks to the bottom, it's going to go up. So right here we have this long wick, and this next 15-minute candle that comes out, you guys can see if I circle it, look at that wick right here, how it didn't get near as high as it did on this wick right here. So that's a good sign, like, okay, we're probably not gonna go up. That is a spinning top right there, that candle that I'm circling, that's a reversal candle. Then what did it do? One time when it trapped all the buyers, everyone that was right, the sellers that were right, had to stop them out, because no one wants to have a 600 pip stop loss. But at the end of the day, you kind of do have to have a bigger stop loss so your trades don't get stopped out. And what happened after that? When it tested it one more time, and within an hour, including this candle, could have entered right there, dropped 1,263 pips. If you're using a 10-cent lot, that's a $1,263 day right there. And that's a really big payout, guys. Obviously, a lot of you don't have a lot of money to start trading with. And that's why I said in the beginning of the video, like, I'd recommend trading with at least $1,000 if you're trading US30. So you guys can see it's very simple, very easy. I don't complicate things. I find the session and the times that I'm gonna trade, and I stick to it. And that's the thing that I didn't do before, is I was just trading whenever I wanted to trade. I'd wake up at 8 a.m. I was like, okay, let me trade from 8:30 to 10:30 today. Or let me wake up at 6 a.m. and trade from 6 to 8. You guys need to have specific times that you trade. And one thing that you guys can do as well is go back in time. I gave you all this information right here. So we're gonna go to the minute 5. So I said at 6:30 a.m. is the open of the market. Go back test. Be like, okay, what happened at 6:30 here? Boom, we had a false breakout right here. Then we had our overall move at 6:50. That was the same time that the market reversed. Today was around 6:57 a.m. and then boom, it had its initial push right here. So a lot of people got faked out, false breakout, came down, then the actual real reversal with the big move actually happened. So another thing, go back in time, like right here, beautiful. I remember catching this setup right here. 3 hits to the top, then what does it do? It has the pin to the top, drops down. Like, this was the overall really good move right here. So this candle, this was the overall move that happened when the New York, or the session, actually opened up. So we can see we have our 6:30 candle right here. This is our 6:25 candle, but it opened at 6:25 and closed at 6:30. So we could have seen that we had 3 hits to the top. This candle did close bearish. There's a retest of that candle, then boom, drop. In a matter of 10 minutes, guys. If you were to sell right there, your stops would have been 275 pips. I would have gone a little bit higher, like 300 pips, but you had a reward of 601 pips, which is a perfect 2-to-1 risk reward ratio. and you could have even held it and then caught another entry right here and wrote it down about right there, 466 pips. So really good trade right there. And that same reversal happened at 645, 650, and then dropped again. Another reversal right here at 710, dropped again. So there was 3 levels to drop, 1, 2, and overall this was the 3rd right here. So that's one thing that really helped me become a really good trader out of nowhere and really understand how the markets move a million times better than before, is because I was always studying these courses. And I was like, okay, I have the information, but how can I use it now? And I never actually went through and back tested. And if you guys want to really become good at trading, focus on one fucking currency pair. Just one. You guys don't need to trade the whole markets, and what you need to do is go back over the currency pair. I put the session breakers on here so it's easy to see when the New York session is. Okay, now I can go back. Okay, here's a New York session again. What happened? What time is this? 6:30 a.m. That candle closed right there. M formation. Hit that resistance, rejected it, pinned to the top, fucking free fell. This trade right here is like 2,500 pips. It dropped in the New York session right there. But you guys can see that that's a really good time to trade. Like, look at right here. There's nothing going on in the Asia session. All this range right here, it went down just as far as it did from here to here in a matter of 5, 10, 15, 20, 25, 30, 35, 40, about an hour or two. It took probably an hour and a half to get to that range, where it took a lot longer right here to get to there. It took 6 hours. So what it had to do in 6 hours, it dropped just as far down in a matter of an hour and a half, 2 hours. Let's see exactly what it was. An hour and 20 minutes. Wow. And that's the thing, guys, you shouldn't be in the markets just staring there waiting. Like, if a trade's not going the way that you want, within 2 hours, scratch it. You're good. Move on to the next day. You want to see an instant reaction, because that's when you know that the big players are in the market. When the market's moving quickly and there's a quick reaction, that means that money's behind it. If you see the market just consolidating, going slow, there's no fucking money in the markets at that point in time. So hope you guys enjoyed this video. See you guys later.